Warren Buffett once made a $17 billion mistake. And odds are, you are making a smaller version of it right now, and don't even know it. In fact, he made $3 billion mistakes. And all three are packed with hard lessons for you and your money. So, Buffett loses his shirt, and somehow your finances are at risk too? Yes, this is a story you gotta hear. Let me tell you the details, because it could affect you more than you realize. Let's start with Buffett's first big blunder, the Dexter Shoe Company. Back in 1993, he bought it for $433 million, and he didn't pay cash. He paid in Berkshire Hathaway stock. Stock that would later be worth over $17 billion. He thought he was getting a solid brand. But he missed what was coming: cheap foreign imports. Foreign brands flooded the market, and Dexter collapsed. And that stock he gave up? Gone. Along with all the wealth that would have compounded over the next 30 years. The lesson for him, and for us? Never trade a proven asset for a promising unknown. Do your homework, then do it again. Buffett thought he was making a smart bet, but he swapped a wealth-building machine for a sinking ship. It's what you miss that can wipe you out. Mistake number 2, ConocoPhillips. In 2008, oil prices were surging. Buffett jumped in and bought billions in stock, right near the peak. Then came the crash. Oil collapsed. The stock tanked. Berkshire lost billions. Even Buffett admitted. He got caught up in the hype. The lesson here for you: when everyone's euphoric, take a breath. Great companies can still be terrible investments if you overpay. But not all of Buffett's regrets were bad buys. Some were simply missed opportunities. Mistake number 3, the companies he didn't buy. Amazon, Google. He admired them. He saw their potential, but he passed, calling them outside his circle of competence. Years later, he called that hesitation a huge mistake. Why? Because sometimes doing nothing is the most expensive move of all.
So what does this mean for you? It means never trading long-term wealth for short-term hype. Buffett did, and it cost him $17 billion. It means ignoring the crowd when they're losing their minds. Because even legends get burned chasing momentum. And it means action beats hesitation. Buffett missed Amazon and Google not because he didn't see their value, but because he waited too long. If any of that hits home with you, then this channel is your warning system. Subscribe now and hit the bell, because next time we're unpacking how to spot those costly decisions before they wreck your future. Stay sharp, stay curious, and I'll see you in the next one.